Welcome to Zen and the Art of Real Estate Investing, one of the fastest growing real estate investing podcasts in the world. What if you could learn from experienced real estate investors? Find out what got them to where they are now. Get insight into their daily habits and take these insights to inspire your own growth. Each episode, Jonathan Greene shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor and the founder of Streamline, a data-driven, investor-friendly, independent real estate brokerage located in Madison, New Jersey. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, this is the free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for showing up for another episode of Zen and the Art of Real Estate Investing. Brian Tran is my guest today. We're going to talk about how to flip your story and build real wealth. And Brian should know he was born to immigrant parents, raised in the Bay Area, built everything from scratch. He learned the game through hustle, failure, and relentless execution. You're going to find out all about it now. This is episode 305 of Zen and the Art of Real Estate Investing with my guest, Brian Tran. Brian is a founding partner at 50 Hills. That's a real estate brokerage in the Bay Area, host of the Winners Club podcast. And he's also a real estate investor who has flipped over 100 properties, probably so many more by now, and built a multimillion-dollar portfolio. Brian, welcome to the show.
I'm so happy to be on. Thank you.
Yeah, I'm excited to talk to you. We're recording the day after Thanksgiving, so we're both feeling good, full up on all the stuff. But let's start with the why. Why did real estate become the thing for you?
It's going to sound so cliche, but my parents they fled Vietnam because of the Vietnam War, and they came here to America, the greatest country on earth. And back then, when they came around, the American dream was to own property.
Yeah.
Right? That's all they knew, and that's all they instilled in our brains. And so naturally, when I was old enough to go and make money, I just knew that my money had to go into real estate. Now, stocks and now there's crypto and all that stuff.
Yeah,
I didn't care. I just know that you focus on one thing first, and then you can do everything else later once the foundation is poured. So that's the short answer.
Yeah,
it's just been pounded in me.
Did they buy real estate when they came over?
They did. And that's why it forced me to expand on it. Because if someone can come here, no money, no English, and still buy property, then I can do it. Now, unfortunately, they bought in the worst of the worst neighborhood. They didn't know any better. You buy what you can afford.
Yeah.
You buy cheap. You buy the 100, 150 in the ghettos.
Yeah.
So they had the right idea, just not the right plan and execution. And so I'm going to fast forward a little bit, but when my dad passed away, he had like maybe 3 properties or so, all in the hood, all underwater. This was around 2011.
Yeah.
And so I was 19 and we had to fight to keep those things afloat. We had to sell some because my dad had Social Security and coming in to kind of offset some of the mortgages. But when he passed away, 19-year-old me, my brother wasn't that much older. And we're like, how are we supposed to come up with that one's losing $500 a month. That one's losing $800 a month. That one's losing $700 a month.
Yeah.
And so it was a tough lesson, but I'm glad I learned it.
Yeah.
To buy good properties.
And that was at 19 when your dad passed away?
Yeah.
Yeah. So, my mom passed away at 20. I had my dad till 33. So I had 14 extra years of my dad guiding me. He was a real estate investor and attorney, just like I was. But were they telling you to invest in real estate, or did you take it as a sign that they had done it and they did it the wrong way and you were going to do it the right way?
I mean, I'm pretty fortunate to have been around a lot of great mentors in the form of books. And so them buying the wrong property, I just knew that, hey, if they can buy it, that's proof of concept. You can buy. Then Rich Dad, Poor Dad came around, and then I learned assets over liabilities, cash flow, very basic financial literacy that, hey, you got to have positive income, right? Yeah. It's not rocket science. But that's why I love real estate. I love real estate because You don't need a PhD. I
Yeah.
suck at math. If you throw freaking random equations in like calculus and all that stuff, I don't get it.
Yeah.
But you give me a balance sheet or a profit and loss statement, I get that like the back of my hand, right? So that's why I love real estate. Like, it's not complicated.
Yeah, and if you boil down rental properties to the old 1% rule, you can still look at them like that. Of course, things aren't trading at the 1% rule in most markets, especially not in the Bay Area, but
No.
you at least have a very napkin type of calculation that you can do to tell without looking at a spreadsheet to say, is this a good deal? And then if you're local and you know the area, that's obviously going to help you. Did you start investing where you were living at the time? Because you live in a high price area.
We grew up in Oakland. I invested in Oakland. I still own a lot of properties in Oakland, but like I said, now I know better. I'm trying to exit out 1031 exchange those properties into more of the Silicon Valley.
Yeah.
Right. So I'm still very much investing in California. I have a portfolio outside of the state, but I love the appreciation here. This is where wealth is built without you having to do very much.
Yeah.
The other states bring in cash flow,
right,
which then allow me to weather the storm day to day. And, when things don't go right, you have cash flow. But California, you don't have cash flow. But I mean, in 7 years, if you look back at some of my properties, they more than doubled.
Yeah. Yeah. I mean, I live in New Jersey. It's the same way. It's an appreciation state. And people are like, you can cash flow. It's just a very different cash flow. It's very little, but with high scale and appreciation. But you're doing what I always think is smart geographic diversification once you learn how to buy out of state, because you can leverage that Midwest type cash flow or wherever you're doing the cash flow against your slow appreciation, where maybe you're break even and people are like, oh, that's a terrible investment. Talk to me in 5 years, like you said, when I've doubled my money.
And I think when you look at the portfolio, I try to look at it like how most stockbrokers look at theirs, right?
Yeah.
You have some high appreciating things that are a little bit more risky, and then you got bonds and you have treasury bonds and all that stuff. So I kind of look at that too. So half my portfolio are in the appreciating market, very little cash flow.
Yeah.
And the other half, very little appreciation, maybe 2 to 3% a year, but good solid cash flow, bringing in probably closer to 15, 16% cash on cash. And then, that way, if the market goes one way or the other, I'm kind of stable. And that's what I look for. I'm not looking for massive, quick money. I mean, that's what flipping's for.
Yeah.
So, but when it comes to the stuff that I hold, I just want steady growth. And imagine what happens every 10 years. That portfolio should realistically double and then double and double again.
Yeah. And I think, I mean, if you look at flipping, when you get as experienced as you've been with over 100 flips, it becomes a smart game. It translates to kind of, quote, quick cash flow, not necessarily all the time. But once you get good at it, it's kind of just a machine, and you can run you know what your margins are if you're buying in the same areas. So you can just keep turning it over and making the snowball bigger and bigger. Is that what helped you get more money to invest in rental properties?
1,000%. That, and also I own a lot of different businesses. My thing is always, so some years you'll see I invest heavily back into the business.
Yeah.
And some years I invest heavily back into real estate. It just really depends on my energy level for that year. Yeah. And I noticed that for me, I have a growth year, and then I have a more stable, more calm year. My kids are young, so I try to balance everything. And I know balance isn't the right word to use, but that's why it's like some days I will be more attentive to them, and some days I'm more attentive to the business. And so depending on how I feel, my energy level, I go hard or I chase steady growth.
Yeah. Yeah, but that's the same type of diversification that you were talking about between the states and the appreciation. It's really the same mindset to make sure that you're pressing levers at different times and paying attention to yourself and the family to make sure everyone's kind of all on the same page.
Yeah. Otherwise, you end up divorced and they take 50%. So what'd you work hard for? You just lost half.
Yeah.
Right.
Well, yeah. And I've always said all of the best real estate investors, all the people that we know, the successful ones, their partner and family is on board. And if they're not, you're not going to do well, because you're always going to be arguing about why are you buying another property. And that's a terrible way to live, even though you just can't explain it that many times.
Yeah. I try to involve them in everything. My son's 7 years old. He's actually outside right now because Thanksgiving break, they're in school. And I just love breaking it down and showing him what we do. And so that way he understands it. And at 7 years old, he's always asking me about money. And I'm happy to talk money with him.
Yeah, well, I can give you a preview of what's coming because I grew up with a dad who took me to junk dumps at 2 years old on. I've been walking properties for 50 years. And I learned everything by just hanging around with him and looking at properties and looking at his lipstick flips and, buying commercial properties. And even when I didn't think I was learning so much. And even as a teenager, when I was trying to resist, I didn't have the social media to look at in the car. So you're just talking the whole time. And it was really about money, but it was about real estate as a tangible asset. And we would go and see the rental properties. So when you can show even kids something, it's right there. It's tangible. It's not like a stock that exists in the air.
You make me excited because I'm like, that's what I want him to do.
Yeah.
I mean, I'm not saying I'm going to give him everything. He's not going to take over the empire. I learned that. Like, he's got to earn what he's going to. I want him to make a name for himself.
Yeah.
But I want to pass on the knowledge, the skills, the foundation. I don't want him to just think that what we have is just came out of nowhere.
Yeah.
So,
well, I mean, it didn't because it only, it goes back one generation before you of, your parents just trying to figure out what to do once they got here. And you said not even speaking the language.
And I think that's my greatest lesson that I got from them. I got to see it.
Yeah.
And sometimes I'm at a place now where I can slow down, but I choose not to because I don't want to take that away from my kids. I don't want them to just see me on vacations or hanging out all the time. I want them to see like, hey, we work. And this is the work ethic you have to have if you want to build anything great. Right. So that's why I won't stop.
Yeah. And I think, everyone loves to talk about the FIRE movement, but I think when you look at people who like to build businesses and like to, earn, it doesn't stop. I don't want to retire. I just do something else. I mean, I'm always working because I like to work on the things that I like.
That's right. And I think that's the beauty in entrepreneurship.
Yeah, exactly.
Especially once you have enough, and talking about rental properties, once you have enough and you have enough coming in, and it does take time to build it. I'm just fortunate to have active income dump into a lot of real estate. Now the cash flow allows me to have the freedom, options, and choices to do what I want. And now I can do what I'm passionate about.
Yeah.
Right. That's why we're here on a Friday.
What was your first entry into real estate? Was it as an agent or trying to buy as an investor?
So actually, I was an agent. At 21 years old, I graduated UC San Diego. And the last quarter of graduation, I took my online courses to become a realtor. I thought back then, obviously, this is around 2012, 2013, that was the progression. You become a real estate agent first. Naturally, then you become an investor.
Yeah.
Obviously, those listening to this podcast, you don't have to become a realtor. I think if anything, it's more backwards.
Most realtors don't even own their own home. It's crazy.
And that's what I ended up figuring out. And I'm like, this doesn't make any sense.
Yeah.
Right. And it's so stupid because they're the first to see all the great opportunities. I mean, I've been hounding on it for years. Yeah. Yeah. To scour the market, to see this cap rate, that cap rate. And then, you get to negotiate and you get your commission back.
Yeah.
But
it's a no-brainer. I mean, whenever somebody says, should I get my license? I mean, you have access. Even if you don't want to be an agent, you're going to give yourself access to properties before anyone else. Ooh, look, 5 dumps on the properties. I can see them all, at 10 on a Thursday when they just got listed. And it's a great way to get reps in when you can't just, you can't go to open houses on dumps all the time because who's doing an open house at those? You have to make appointments. So how did you figure out that it wasn't going to be the agent? How did you transfer over? Did you have investor clients and you're like, ooh, this looks like a lot better?
It's funny that you bring that up. I remember the exact moment. I represented a investor flipper and I found him a deal. So I got paid on the front, but then also he flipped it. And this was during a time when I used to attend every single closing.
Yeah.
And during the closing state, you get the HUD and it shows, hey, Brian Tran, commission, 25,000. I'm in a high price point market. I was selling in San Francisco. Yeah. 25,000. I'm like, woo. And you go down to the bottom and then he's making $250,000.
Yeah.
And I'm like, you didn't even do anything. I want to be on that side.
Yeah.
And that's when I knew I had to flip.
Yeah.
Now, I do want to stress, even being a flipper doesn't make you an investor. You're still a flipper. You're trading time. You're still creating a service. And you're not holding any property.
Yeah.
But it is all a step to making high active income, which then if you're smart, you take that because now you're a real estate professional. You buy rental properties, you buy buildings, you do the cost segregation study, you get the depreciation, you save more money on taxes, and then the cycle repeats. And you just have to learn to delay gratification, because obviously when you make a flip and you're making 100,000, 200,000 on a flip, like that sounds fun to spend, but you have to understand.
Have a snowball.
Yeah, you put it into real estate, and then a year later you live off the cash flow.
Yeah,
I'll be honest with you. I used to think that at 27 I cashed out a Ferrari, because you get stuck in your stupid ways where they say if you can't buy it twice, then you don't deserve to have it. I took that as, okay, great, I have the money, but let me go put down. It was like $145,000. This was before the COVID prices shot up, and I paid cash, and I was like, that's stupid. I could have just put down and financed it. At the time, car rates were 3%. Right. And then I could have took that money and bought more real estate. But, we weren't thinking all the way, you know?
Yeah. Well, so people now, though, if you're talking to younger kids now, 20s, and they're chasing the thought of that Ferrari, what do you tell them? Because I don't think that it's what people think. It's like, okay, you get it, and then you don't have any income from it. Like you were saying, it's like it's an asset, and it doesn't necessarily even hold its value the second you drive it off. Better than some cars, it certainly does if you keep it up well. But still, it's a different type of asset.
What do I say? I think that I did it right. I owned enough real estate. I had enough cash flow coming in. Honestly, if I was smart, I would have put 20% down. Would have been whatever. I could have put 50,000 down and then financed the other 90,000. And my at the time, I had already amassed enough businesses and properties to have paid off the note just from the cash flow.
Right.
I think that's the way you should do it. It should never be your active income going towards toys.
Yeah.
Right. And you have to look at money as it always has to work. Every single dollar is a little person that you have to send out there to go to work. And you do that by investing in assets like real estate, stocks, things that go up, things that throw off cash flow, things that throw off dividends. And if you do that, you'll never go broke.
Yeah, I like that thought of thinking of it as little workers, like you're just sending them out like, hey, you got to get to work too. The money's got to make more money.
Yeah. That's the book. I think Rich Dad Poor Dad. I mean, I think that's where I got it from. It's just, and when you change the mindset and how your outlook of things, and now you don't waste it. Right? Instead of going buying the watches, the cars and stuff like that. And I do have them. I love them all. Yeah. But it's like, you just have to look at it like, okay, do I have enough workers out there? And now how much are they coming back? And then I'll spend a little bit, and then the rest, and then you just keep going back and you keep sending them out more.
Yeah. I worry for the people who didn't build a runway with a traditional job. So they're kind of trying to piece it together. And then they want the toys so bad that they build their first lump sum and they spend it all on a toy, but then they have nothing now they have to start over.
So I obviously own a brokerage. So I've seen the stupid spending my agents do.
Yeah, of course.
I've looked at, okay, the thing that most realtors don't understand, I'm young, but I've been in it long enough to see 3 cycles, right? I was in a recovering market. And so I do owe a lot of it to being in the right time at the right place. My career took off because the market took off.
Yeah.
Right. And then COVID-19 came around, rates drop. Every realtor was making money hand over fist.
Yeah.
Appraisers were making money hand over fist. Lenders were making money hand over fist. But you know what they did? I specifically told my team, I said, look, you take the money and I promise you, this is not going to last forever. I knew this.
Yeah.
And I said, just live below your means, buy something or invest it. Don't go buy the Range Rover. Don't go take on, every realtor was taking first class flights. They were going on trips.
Yeah,
it was
like
nuts.
When you could buy something at 3%.
And then guess what happened? Okay. The smart ones that listened to me when the market, obviously 22, when the rates started to creep up faster than we could manage and everything halted, right? The ones that listened to me and saved all the money were able to get amazing deals on real estate, which are now paying them. And now their business is stable. But the ones that blew it, now guess what? They're scrounging, they're scrambling, they're trying to get deals to work, but it's harder than ever, and they don't have any savings because they blew it all.
Yeah.
And I'm just like, what you do the first time you come into money can either set you up for a stable future, or you're just stuck in the rat race again.
Yeah.
So I was smart. I'm Asian. My family are cheap. They always, and also losing everything in Vietnam, they became very, like, I don't know what to say, like frugal.
Yeah.
And so I became frugal. I'm like, I shouldn't spend this. It just doesn't feel right. Just because I have that much in my account doesn't mean I go and buy this dumb stuff. But then, we just kept buying real estate.
Yeah. And I think, it's smart to be able to reward yourself. But once you've gotten to an area where, like, I can take this and use it, and all, like you said, everything else is still working for me there. I think that's the important part that people need to look at. It's not a quick fix. You can't get there as quick as people want to now.
People they overestimate what they can do in 1 year, but they underestimate what they can do in 10.
Yeah, because they're short-sighted and they can't even see over the year, and I think that's what it's like. How do you read books about, compounding stuff and then not take it into account? It's just like, or just that one, a penny a day into a bank account, how much it turns into in a year. It's like, I guess part of it, I think, is social media, and you're big on social, but don't you think that people kind of look at it, and because they're only looking at a 30-second clip, they probably miss the message a lot of the time?
Yeah, they do. And if you do a long clip where you try to provide a lot of value, it does nothing. It gets like 0 views.
Right. You look at the time, like especially like a YouTube video where it's a 5-minute explainer, which again is still short on YouTube. You look and like the average watch time's 36 seconds. Yeah.
That's just what it is. People the attention span is gone.
Yeah, it really is. Yeah. That's why reading is still important to soak it up. But again, if you're looking at your phone every time you're reading, you're going to be in trouble also. There's so many things competing for our attention now. How do you think how would you tell someone to try to stay focused in this type of environment on the things that they want to invest in? Not chasing shiny objects, because they're all over the place.
The big thing is we do a lot of business planning for the people that are around us. We do a lot of business planning to get clarity.
Yeah.
Why are you doing it? And then what happens is we always keep it around them so that when they try to go left, you bring them back and you say, hey, this is not what you wrote down on that piece of paper.
Yeah. And
by going left, you're breaking a word that you made to yourself. That's integrity. Like I face shiny syndrome objects all the time. I want to go, I have ADD. I'm just like, boom, 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 boom.
Yeah.
But if you keep doing that, you will never be great at anything. And then you're always constantly starting over. When you jump and start something new, you jump and start something new. So you're always going to be a newbie. And newbies don't make money.
Yeah.
Professionals make money.
Yeah.
Masters make money.
Yeah, I think people sometimes also think once they've chosen something and then they're not good at it, then that's it, or then they keep looking for something new. It's like, even if you try, say, flipping and you make 0 on your first, which would be fine because you take those lessons in and decide whether you go to number 2 or stop and pivot to trying to buy rental properties if you have the money. They don't look at it as this whole thing that we're doing on earth as an education. Everything is a step, every failure is a step. How many times have you had flips that go bonkers? Because I've been flipping my whole life and I'm still going to screw one up, once in a while. It's just what happens.
That's right. But even when you don't win, right, and you lose, but you learn, learning is the highest form of winning.
Yeah.
Like we've had 2 flips this year we didn't lose, thank God, but you're talking about 3 months of work, time wasted to make $10,000. So that's a fail. I mean, like I could have done anything else and made $10,000, but then we learned like, okay, well, our buy box was screwed up here.
Yeah.
Like the market pulled back too hard. We should have bought it for a better deal. We didn't see the writing on the walls in that market because it wasn't a market that we were like, we had a strong pulse in.
Yeah.
And so we knew. That's it. Now we know just to wholesale those ones out.
Hey, it's Jonathan. I hope you're enjoying this episode with Brian Tran. And if you want to find out more about what he does before the end of the episode, go to MrBrianTran.com. And the Mr is just MR, so MRBrianTran.com. And you can find out all the things that he has available: flipping, speaking, entrepreneurship, and communities. Let's get back to the show. Yeah. Did you ever do wholesaling like as a full business?
Yeah. We have a full-on team outside right now making calls. Yeah. So it's great. So we look at it this way. The wholesale will pay you in 30 days. The flips will pay you in 4 to 6 months. And then we have big, we're working on some big developments, which will pay us in 18 to 24 months, right? And then we have the rental properties, which will pay us forever.
Yeah. And monthly.
You have to always look at it that way. And if you do that, then you have a stable business. But I know people that only do developments, that only do, year-long flips and 18-month flips. Guess what? Market turns. They spend all that time and they make zero.
Yeah.
And that's fine. Look, you didn't lose, but then you also didn't have any other money coming in to live.
Yeah. No momentum for success for any of it. Specific to wholesaling, though, because I think it gets a bad rap for a reason, but people look to wholesaling as like a way to start. Do you think it's a valid way for somebody right now in 2025 or soon to be 2026? Can they start in wholesaling still? I find like the good wholesalers are so much better than everybody thinks. And there's just so many bad wholesalers because they don't have the money. So they're kind of, that's why you end up in these like 6 daisy chain scenarios where you're like, who the hell has this property?
Even the daisy chainers make money, believe it or not, because there are a lot of newbie flippers out there who have no mentors and they overpay. That's not your problem.
Right.
But I would say, yes, I would say, don't rabbit hole yourself into just being a flipper or a wholesaler or a long-term hold. When you go into a deal, I look at all possibilities. And so, yes, you can still wholesale today. Yes, it is hard. Yes, you are competing against companies like myself. I'm competing against companies that are 10 times bigger, spending 20 times more than I am a month.
Yeah.
But there's always, it comes down to your skills.
Yeah. I still think people can micro wholesale, meaning like you could be brand new, pick a neighborhood with 10 blocks and just mail those and call those and be the local person. Because I personally think that the best wholesalers always start off as local home buyers. They build relationships. They know people. They're good on the phones. And then they have overage. So they just start selling off their overage because it's smart. And then they realize, oh shit, we're good at this. We can sell 20 a month to our friends and make a good thing. Is that how it works for you? Because I know you've done all of that before and you were already flipping.
We don't do 20 a month. I wish we did 20 a month. Our price, so
no, that's a lot.
but yeah, that's exactly right. And a lot of times, like I'll look at a project and now I don't want to do a year-long project. So my thing is 6 months and under. So if it doesn't fit my buy box, we just wholesale it out.
Yeah. And you also know everybody now. So it's like your network is like, it's almost a gift, sure, you're going to take a spread, but it's a win for somebody else. Cause on the flip, they can make X amount.
Yeah. And they want to do the work you know what? There are people out there. So I need to make 10% of ARV at the minimum. Anything below that, I don't even touch it.
Yeah.
But I do know flippers that would do it for 7, 8. They're happy with it.
Yeah.
And so that 2% spread, that goes to me. And we're in a high price point. 2% on $1 million is 20 grand.
Yeah. Let's talk Bay Area a little because there are people who are, they're living in Southern or Northern California, or they're living in a place like me, suburbia, New Jersey, or in a big city like New York City. How can you compete with high prices when you're new? Because you started there and you got it going. Obviously, Oakland's a little bit different than San Francisco in terms of price point, but Oakland has scale too. You just have to know where you're buying.
Are you talking about flipping or long-term rentals?
I would say start with just real estate as a whole, like where to invest, because the biggest complaint we see from people in California, hey, how am I going to ever own anything? Or especially now, younger people, they don't see the scale to ownership or to investing really either. So they think that, maybe they have to park in the Midwest.
They have an income issue. I hate to say it, but you have an income issue.
Yeah.
So you have to make more income. So it might be in the form of wholesaling. It might be in the form of flipping. You can own anywhere. Trust me. Yes, it's expensive, but it's just numbers, right? People think, oh, if I move to the Midwest, life's going to be easier. Well, guess what? Your income also drops.
Right. Your job makes half as much.
My nephew yesterday, he says he wants to start an HVAC company. He wants to move to Dallas. And I said, you stupid. Like, why don't you just start the HVAC company here?
Yeah.
Oh, it's hard. I said, you don't think it's hard in Dallas? I said,
what's the difference?
It's
hotter actually in Dallas.
He goes, yeah, but I can buy a house for $300,000, $400,000. I say, who gives a shit? I said, if you can make a business here, you can buy a house that's $800-900 $1 million. It's the same thing. Our price points are probably higher. Our cost, when we charge for HVAC, I know what I pay. It's probably more than it is in Texas, right? Out there, it's probably 30-40% cheaper.
Yeah.
Because our labor is more. But the same thing. It's the same margins whether you go here or there. But I said, you have an income problem and a mindset problem. I said, here you have connections. You have me. You have like my brothers are all in real estate. We can refer you business. Like that's the smart thing to do.
It's a no-brainer.
My brother has a truck he doesn't even use. My brother has like vans and tools.
Yeah.
Because he's a contractor. He's like, you just take a truck, right? But so when I hear young guys saying that they can't make money, I'm like, that's not really true. Because I mean, there are my brokerage represents young guys that are buying real estate like $1 million, $2 million, $3 million properties. They don't have an income problem.
Yeah.
Right. They go out there and they work for AI or they do their own business. But that's just the truth. Let's take some accountability back. Let's not just keep complaining about the economy or I don't get paid enough. I think we all have choices that we have to make. It's not easy, right? But we can do it. And I think the attitude, the mindset, that has to change first.
Yeah. And you get to the job you love later. You're not supposed to love your job when you just started working. It's supposed to be a grind. I mean, and if you keep doing it and you keep a good attitude, then you'll keep getting paid more. Maybe it's not a ton more, but if you're good at your job, you'll keep rising wherever you work, even at Starbucks, anywhere. If you then you're the manager. What's wrong with being a manager at Starbucks? That's good. You just keep going up the scale. Maybe you're in corporate. I don't think people see that it takes a while. You don't have to do, what a lot of people's parents did, which is, go work at the factory, get the same paid for 40 years and think it's going to be great. But, I work for the government and I just kept my head down and I was like, I'm just going to do great. I was getting paid shit. But I kept getting raises because I just wanted to work and I worked my ass off. And I think we're losing a little of that. I think we lost a lot in COVID because people didn't have to work.
Yeah, I agree. I have a lot of staff and they don't have this. It's not the same.
Well, I own a brokerage too. And I look at real estate agents who don't take they don't get a salary. They're independent contractors. And it's like, are you guys going to do anything? Like you only getting paid commission. Like it doesn't appear out of the sky. And you look at, why everyone's like, whoa, why do real estate agents fail? It's like, they don't do anything. It's hard. You have to make business happen. Exactly. But that goes the same for real estate investing as well. Buying a multifamily, anything, just trying to run your first rental property. Everything's a business once you get going, right?
So I'm going to say this too. I'm going to go back because I want to give people real tactical information and things that they can do. If I was working at Starbucks, I would figure out, obviously live below my means, and I would try to save up $30,000 to $40,000. Yeah. I know that's a lot of money, but you can do it if you have a plan in place, and it'll probably take you 2 years. Okay. Then I would agree. I would buy out of state.
Yeah.
Because you got to get that first one out of the way. You need to get the proof of concept. You need to prove to yourself internally that you can buy it, manage it yourself, and see the monthly checks roll in.
Yeah.
Okay. And I think from there, you got to think of it like monopoly. Now, what's going to happen is over time, that property will appreciate and it will allow you to either refinance it out, do a cash out refinance, take the money and go buy another one. Right. That will happen. It will take time. That'll probably take another 5-6 years. But if you don't buy that first property, in 10 years, you'll have nothing.
Yeah.
You'll probably blow the money. And here's the cool thing. It takes you 2 years to save up 40 grand. Okay. Well, guess what? You buy the first property, you save up another 2 years, right? Now you have 2 properties. In 4 years, you have 2 properties. And it sounds slow, but it's always like that, right?
Yeah.
You're pushing that snowball up the mountain. And then what happens? It gets bigger and bigger and bigger and bigger. But that first initial push, the first 10 years, very hard.
Yeah.
And I don't care what age you are. If you're 20s, by your 30s, you'll probably have 3 or 4 properties. If you're 30s, by the time you're 40, you're probably going to have, 5 or 6 properties. But that's how it starts. And you have to start, and you have to have a plan, and you have to have a vision, and you have to stick to it. It's not going to be easy. Nothing's easy. And then along the way, like John said, you're going to get raises. You're going to get promotions. You're going to get a new job where it pays you. All of a sudden, you're making 50% more. And then you dump it back into real estate. Now you broke you're on a roll now.
Yeah,
And
and
that's
you were saying something before, and it made me think of this. Like, okay, so just say we'll just use our Starbucks example. You're working there. You know how many people you're contacting that could be future contacts for real estate? You're in great conversations. You're learning how to build relationships. What if you then decide to become a wholesaler? You're so much better just by building conversations. During COVID, when everyone was working from home, they're having Zoom conversations. Now they got lax about their communication skills. But if you're good with people, you'll be good at real estate. You'll get better deals. You'll be able to work, do better because you're focused on relationships. I think people kind of are losing out on that. I'm trying to push everyone back, like make sure to go to meetups, talk to people in person. You got to get back on the horse because that's how you end up later getting the best deals and realizing, hey, wait, that person I've been serving at Starbucks for 2 years, they have 9 multifamilies and maybe they want to get rid of one. Do you agree with all that and see the scale on that?
I agree.
Yeah.
The more hands you shake, the more money you make.
Yeah.
That's what it comes down to.
Yeah. Yeah, it's true. I mean, and because you're building something where people can look at you and know you're reliable, like you're there for them.
Yeah. I mean, I go and hammering in the idea again. I bought a property in Oakland. This was my very first property. I did a stated income loan, basically, which means that you just tell the bank what you make and they approve the loan. The rates were 5.75 when I got it, when it was a lot higher than what traditional was. Traditional was around 3.8, something like that. So I paid a premium. I just said, I got to get into the property. What ended up happening was, at the time of buying the property, rents were okay. But guess what happened? Every year, rents kept going up and drastically up. And that's nothing that I had control over, but I reaped all the rewards because I bought one property. I didn't expect that. There's no way I could have projected that or put that on a formula or an Excel sheet that would have been like, this is a great property.
Yeah.
I just knew at the time this was a decent property. And then guess what happened? Years later, when the rates dropped down to 2%, 2.5%, I refinanced.
Yeah.
And guess what happened during that whole time? Values went up and up and up. I refinanced. I took out a few $100,000. My mortgage actually went down because it was so much cheaper. And then I took the money and I bought more properties. But it never would have happened if I didn't pull the trigger on that first property.
Yeah. And don't you think it just, when you buy your first property, that type of ownership, it just feels better than owning stocks because it's tangible. You can go to it. You can add a new bathroom and now it's worth more. It's just like the mindset is there. I know people say like, oh, home ownership's getting less and less important. And I understand why, because you can rent and use the money, but we were all say, well, invest in real estate. It just feels different when you own your first property. I feel like there's no one who gets their first property and doesn't feel like they've accomplished something.
Agreed.
It's fucking awesome.
Yeah, I agree. I mean, I like to touch my stuff. And now I don't. Like now, I've never been to Alabama. I own a lot in Alabama. I don't have to touch those. But it's just like, I know it's there.
Right. If you wanted to, though, you could go there. And you could, talk to it. That's what I learned that from my dad, because he literally would bring me to meet the tenants. We would collect the rent in person. This is like late 70s, early 80s. So I was looking, I was like, oh, people, like I understood. Now with technology, I hope that people still get that landlording is a people business. You're giving someone a home, you're helping them out, they're going to pay you. But yeah, technology's throwing things off. It's not a video game. It's real life out there.
Yeah. And the other thing is real estate, till this day, it'll beat a lot of other asset class because of our tax, like the taxes.
Yeah.
Your biggest partner in business is the government. It's the IRS. So anything you can do to offset that is more money in your pocket.
Yeah. And that's what you mentioned cost seg before. I mean, once you get good at real estate and you have multiple properties, you can play these things against each other by using real tax strategies that exist. It's not fake. They exist for a reason, and you can balance them against each other so you can help yourself out on the things that you want to do.
It's not illegal, guys. It's not illegal.
Right. Everybody wants you to do it. They put the rules there for a reason. Going through your career, what do you think the biggest mistake that you made in real estate was?
I kind of bought in the hood.
Yeah, so no appreciation and no rental change. Yeah,
less appreciation. Still good, but you're just dealing with a lot more riffraff.
Yeah.
you know, and it makes the business more hands-on than it has to be.
Exactly.
Yeah.
I've always said that for people who like want to do large scale Section 8 or large scale like D areas, you just only have to do that, because if you're really good at it, they're unbelievable. They know the systems, they have everybody in place, they know that it's going to be a lot more. But aren't you like, for that first person who wants to get in the game, I'm worried if they say, oh, I'm going to get this D plus, it's a lot, but you are going to get the ownership. How do you balance that?
Ooh,
It's
if you're
tough.
not like, so with me, I was a real estate agent, so I was still very much, I live, breathe real estate.
Yeah.
But if I had a W-2 job and I worked a corporate office and I had to be in an office for 9 to 5, don't buy in the hood. It will become a full-time job where now you're getting called here, called there, and you have a job to report to. Whereas with me, I mean, real estate is my job. So I didn't mind going out there and handling it because I was paying a bigger cash flow. But I would say try to buy like B plus, B at least there. Don't buy a job.
Yeah.
I think that's really what it becomes.
Yeah. And I mean, a lot
The
of
property
my
managers won't go. They say they will, but they won't go.
Right.
I don't know any property managers that like openly say, I'm going to manage the hood.
Yeah.
They just don't.
Yeah. I mean, I think it's a great, if you're buying a first property, and you, again, you have a job, you're not like committing to trying to learn this, buy something turnkey, pay more to do it, because if not, you're not going to be even manage the contractors. I mean, if you're trying to manage a contractor on your first property, you're already in the red. Instead of just buying something turnkey, either with or without a tenant, having your realtor help you get a good tenant in, and then you're just like, money's coming in when it's turnkey. You get money right away. So it's just that's an easy way.
Neighborhoods don't cost much. I think people kind of get that. Like, there's parts of Alabama that were 200,000. That is like
and
great,
solid rent.
Great, solid rent, great location, beautiful houses. So it's not like you're paying. It's California, obviously B will cost you a lot more.
Yeah.
But there's a lot of states. So just do your homework, do your research, and just don't buy the $50,000, $60,000, $70,000 properties. I don't.
Yeah. How did you choose your out-of-state markets? Are you doing it on your own, or did you find turnkey providers or partners there?
No, we did it on our own. I looked for population growth, strong median income. Now, obviously, not strong for what it was. I looked for what was driving their economy, meaning like, was there stable jobs? And there was a lot. And then I tried to find the 1% rule, and it worked out there.
Oh, it exists. Yeah.
So it's very simple. I didn't try to, I've had analysis paralysis for out-of-state investing for so long that I just never pulled the trigger. So I said, you know what? These are the 5 things 5 or 6 things that are mandatory. And then that area fit, boom. I bought 3 and then another 3. And then, just kept buying because it was so cheap.
Yeah. I think people think that the 1% rule doesn't exist, but it certainly does in the South and the Midwest. But yeah, you had to learn and figure out, but you never even took a trip there, right?
Mm-mm.
So how did you?
Today with technology, FaceTime, reviews and all that stuff, it's not like before. Even my mom back then, she was like, don't do it. Your uncle invested it in Texas and he lost everything. I said, Mom, back then, there were no FaceTime. There were no, the reports were fudge and everything like that. It was just so much Wild West, right? Now it's a little bit harder for people to lie and try to cheat you.
Yeah. Did you just find a reliable agent through your contacts so you knew, okay, and then you obviously can look up the values and kind of see, like you said, with all the markers that you were looking at.
Look at the crime map. Back then, when my uncle bought in the early 2000s, I doubt there was a crime map.
Yeah. My dad just bought weird stuff. If it was a deal, he bought it. He'd figure it out later.
Yeah. He probably had to go there. I still do that too with some of my properties locally. I'll go there and I'll be like, that house has a junk cars.
Yeah.
They all have bars on the windows.
Yeah.
You look at the Google Maps and you're like, okay, this is not a good neighborhood. But back then, he didn't have any of that.
Yeah. Yeah. I think there's a lot of ways that people can get into real estate easier than they think, but you still have to put in the work, or else you're going to be trusting someone that you haven't built up a relationship with. How do you think people should get started with that?
Always trust, but verify. I would say try to get 3 opinions, especially if you're newer. Like when I did it, I actually interviewed 3 realtors, and I had them not really work for me at the same time, but when one realtor would send me something, I'd send it to the other 2 and be like, what do you think this is worth? What do you think about the neighborhood? And if there was a discrepancy between any of them, then I would dig deeper and say why.
Yeah.
But if they all said the same thing, like, oh, pretty good neighborhood, blah, 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 so-and-so, like it's a good place to invest in. Oh, guess what? Now you have 3 people who said it.
Right.
So I trusted the first realtor, but I verified it with 2 others. Same thing with getting bids. I sent 3.
Yeah.
Okay. I need to know 3 bids. This guy came in at 1,000. This guy came in at 1,500. This guy came in at $2,000. And I look at the bid and I say, okay, why is this guy cheaper? And I'd be like, oh, are you going to replace the hose, or are you just going to replace the unit? And then, that's how you kind of get information. The more information you have, the better decision you can make.
Yeah, absolutely. Now, with all you've learned now, when we were talking before we got on, you said now you're starting to look more at commercial. How come, and what is that going to look like for you?
I think commercial is just, you can now force more appreciation into it. With residential, you know how it is. It's based on what the comparable residential property has sold for. And that's really all you can get.
Yeah, exactly.
It's done well for me, but now it's like, well, I'm more of the forced appreciation, just like flipping, right? I'll go in, I'll fix up a bathroom, I'll fix up a kitchen, and I force the value up. With commercial properties, I'm looking at a couple things. I'm looking at retail centers that where leases are probably approaching the end, and we can do increases, right? Either 5%, 10% increases. That jumps up the cap rate quite a lot. And if you, for the listeners out there, the higher the cap rate, the higher the value of the building. Same thing with multifamily. If I can go in there and do what I'm already doing with flipping, let's say, I don't know, I buy a 30-unit building and 5 or 10 of the units are really old, and I can fix them up and increase rent by $500 or $600 a month. That increases the cap rate. So that's kind of how I'm looking to buy it. I'm not just trying to buy the turnkey properties where, it's going to make 5% or 6% cap and there's really nothing I can do to force value. The reason why is because I feel like I still need to, I don't have enough cash to just park it into a multifamily and do nothing.
Yeah.
I need to force it so I can grab some of that cash back out and rinse and repeat.
Yeah. Ed, how much do you think, we were talked a little bit about mindset before and how important it was to get together with your finances and that. How important do you think mindset is now for the new investor? It's a different landscape. People think rates are high, but as we were saying before, if you buy now and you refinance later, that's going to be a good windfall. So I think a lot of it is like these mental models that people are kind of just turning that make it harder for them.
I mean, mindset's everything. And I hate it because you go to all these conferences and I spend so much money going to these conferences and they have to repeat it. And I know why they have to repeat it, because they know that half the audience, they have a mindset problem. They don't have a money problem. They don't have a work problem. It's so important. So you have to, number one, I think even blocking out the noise, because there will be a lot of people that tell you don't do it. Is a mindset thing. You have to have a strong mindset to block them out. Your friends, your family, your mom, your dad, they want to protect you. So they're going to tell you don't do it. But you need to be smart enough and strong enough to have faith in yourself to go and do what you set out to do. And you might make a mistake. And that's fine. Again, mindset will kick in again. You're not a loser because you failed. You're only a loser if you quit.
Yeah.
Mindset will push you forward.
Yeah. Awesome, man. Really appreciate it. Where is the best place for people to get in touch with you? Is it at, it's MR, which is MrBrianTran.com. Is that a great place to start?
That's a great start. And then from there, you can find me on the same name, on TikTok, on Instagram. I'm pretty active on Instagram, and I'm on YouTube as well. So answer your questions, connect with me. I love making videos. I love talking with my community.
Awesome. And the brokerage is 50hills.com. And that's the word 50, not 50.
That's right. Makes it a little bit more classy.
Yeah, definitely. Awesome, man. I really appreciate you spending the time one day after Thanksgiving. Look forward to staying in touch.
I love it. Thank you so much.
Yeah, man. All right. That was Brian Tran. He's one of the founders of 50 Hills, longtime real estate investor. I'm Jonathan Greene. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on episode 306 of Zen and the Art of Real Estate Investing, and it's Spencer Hilligoss of Madison Investing. Now, this is what he calls an investing club, and he has an interesting backstory. He grew up as the son of a real estate broker. He was hosting open houses as a teenager. He actually went away from real estate because it looked so hard, came back to it, got some rental properties, realized, hey, this is a lot of work, started doing LP deals, and now he's helping others do the same. I can't wait for you to hear the next episode with Spencer. See you there.